Hey, it's Edge here, and on today's video we're checking out Ramp. Ramp is on Binance, or this chart is on Binance and on logarithmic scale. So this is what I've got drawn up here. So we are up to this point. This is primary one, and I didn't have a price data back here, so I'm starting the count from here. Obviously, if there's data here, it very well may alter this whole count and even make it invalid. But as I don't have it here, this is what I'm stuck with at the moment. So this is the intermediate 1, 2, 3, 4, 5 into primary 1, and then I have labeled WXY for the primary 2 that is not finished. And why is that? It's just because of this mess here, as I can't, well, I can put this, I guess, into 5, but I saw this triangle formation here. Now let's go to a lower time frame. Here, A, B, C, D, E, and I think I had, actually it's not even correct, because the RSI is not supporting it. Very nice, good demonstration. But in any case, I think this is then, if it's not triangle, then it's just ABC, ABC, ABC maybe. So it's WXY up to the B and then to C. It doesn't change or alter the count, and why I said that is because RSI should show the triangle as well, but for demonstration purposes it doesn't, of course, and the triangle should be shown on every time frame. So I need to alter my count here. I can show you how I think it should be done instead. So ABC up here, then ABC and ABC, and this should be minuet, and there we go. Okay, now that we got that out of the way, actually let's get VP1 profile visible range, so we don't have that here. Yeah, in any case, the 2 primary is coming down here, so WXY targets depend mostly on the inner waves, not just the WXY. And according to this, one target might be this 1-to-1 here. And for the targets on this last leg, that I'm assuming it's the last leg, the targets are here. We're still in this order block, 1 day order block. From here we can go back to daily so we can actually see the order block. So right here, this red line, that red bar here, and we didn't tap it until here, but the issue here is that we already got out of it, and we even back tested the order block here and got a secondary bounce, but then got back into it. So I really doubt this is going to hold, as this third wave is already extended. It's past the 1618. I think the 1-to-1 is still a probable target, also 1618, and if that doesn't really hold it, we still have this order block down here, that is the intermediate 2 or close to it, and there should be volume here. Well, of course this doesn't show it for some reason. Maybe it's just because there's literally, yeah, well, you can see basically a few pixels here that are showing the order block. But yeah, the issues with these low market cap alts are all these wicks. If we go even to 4 hour, we can see all these wicks everywhere. And this is also on Binance. Might be some better charts out there, but that's the thing we have to deal with. And if we would change it to line charts, it looks completely different. Like, check out some of these highs. They just cut in half. And as it was originally, or Elliott Wave was originally without the candles, just in line charts, it could give us a completely different count here. But I like to play with the candles, as they're actually true information, and line charts only gives you information where the closes are. So depending on different time frames, the count might be completely different as well. But in any case, what are we looking here? We're looking for 5 waves down and see where that might end up. If it's somewhere close on these targets, then it might be good place to buy some. But then again, there is always the chance that this is just a part of the correction, and this is not a primary one, because we don't have the price data here. We could do something like this. So W, X, Y, let's just say it's here. And again, if we don't go, or if we do get the 5 waves down here, it doesn't mean that we go to the moon. We can just do the 3 waves down and then again 5 waves up. And at this point, this structure here is either a zigzag or a 1, 2, 3. Then would go for 5. So the buy here after 5 waves is always the most like a riskless version, and not trying to catch the knife here. But in any case, there's also, you could take the lower degree as well and buy back here at this pullback, or the subwaves of this first wave, depending on the whole structure and how high this whole thing might go. Let's say if it just brings us the zigzag here, then that means that more downside is coming, and it would mean this. And at this point it would start to be really scary, because just taking the targets here, 1 to 1 would be down here, and as the price has already gone down like 90-something% to the current one, 92%, to the next target here, if we get that 3-wave move, it's 98%. It doesn't sound a lot, but again, another 72%, 73% from current price. So yeah, that is the risk here. And of course, if you buy it down here or wherever you get a target, just set a stop loss at a reasonable level, so you won't get broke if something bad happens. And also remember to take profits when going up, as this is not really a good market yet established. Also, ramp is so short on the time frame. As I mentioned, the degrees of this whole structure can be way off. So depending on price action before and after, we can create completely different looking charts. But in any case, that's the things I wanted to bring up on this video, and I think that's gonna be all for now. Thanks for watching, and see you on the next one then.